retail sales are important. They're 40% of personal consumption expenditures, which is 70% of GDP. So here's what you need to know before the bell this morning. Markets did rally a bit yesterday. Again, we just kind of keep holding up here, not making huge advances every day, but we've just been running along the 20-day moving average here for really kind of quite a while. Going back to early June, we've just been trending higher. All moving averages now, the 20, the 50, the 100, the 200-day moving average, now all sloping up. That is a confirmation that you're now back in a bull market when you have rising moving averages, particularly over a 200-day period. So you're certainly back into a bullish trend of the market. Very little to deny about that front. But again, we just really remain elevated in the markets. We're pushing up towards 2 standard deviations above the 50-day moving average with a very big gap that we currently have really kind of across these moving averages. These moving averages are now spread out, which is kind of a good thing because it gives you multiple layers of support in the market. So as we've been saying here for a while, you're going to get a pullback in the market at some point here, a 3 to 5% correction. Certainly expect that. That would not be outside the realm of normality. But what you're looking for here in particular is that you've got these multiple layers of support, but a pullback here to hold that is certainly well with what you should be expecting. MACDs is still on a buy signal. We're still very elevated here. The market is overbought. So again, this suggests that upside to prices is somewhat limited. So again, just kind of pay attention to the risk you're taking at this point. This is probably a good time to be thinking about rebalancing some risk in your portfolio as well. Tech stocks have gotten really far ahead of themselves, particularly as we head into earnings. So maybe take a little bit of profits here, reduce those back to maybe market weight or your portfolio weights, however you measure your positions in your portfolio. And then look at some areas that are still underperforming, potentially underweight, that may get some rotation because we are starting to see a pretty decent rotation into some of the other areas of the market, particularly in the small cap, mid cap space. We added some small caps earlier this year with some regional bank stocks, et cetera, and added some small cap index recently. But we continue to see a bit of outperformance here in the small cap index. Now, that index as well is getting pretty well elevated above its moving averages. So again, this market's pretty extended here. So again, you're taking a little bit of profit here, raising a little bit of cash, looking for a 3 to 5% pullback along the way sometime this summer. And I wouldn't be surprised as we get into next month, potentially August, August, September, we get those kind of seasonally weak periods of the year that we see that corrective action, which will give you a better entry point to add some exposure for kind of that traditional year-end rally. But just keep a watch out what's happening here. Earnings are going to tell us a lot over the next couple of weeks. That's what you need to know before the bell.